Every time you get a new candle, whether it's a 10-minute chart, a 15, a 30, an hourly, a daily, a weekly, a monthly, every chart, every new candle you get changes probabilities. It might be a slight change. It might be a big change. When you're looking at a chart with a bear flags kind of work on time counts, and this has gone past its time count.
Gareth Soloway talks crypto moves. He will break down market trends, trading tips, future outlook. Let's watch and learn together.
Bitcoin, obviously, I know all of you guys, or at least a lot of you guys, want to know about Bitcoin. I would love to give you new information here. There's nothing new here. Bitcoin's up fractionally on the day. It is just staying sideways. Now, again, generally bear flags, you should have seen a breakdown already. So again, does it raise the possibility that it could fail? It does. The probabilities, remember, every single candle, and this is what a true technician understands, is that every time you get a new candle, whether it's a 10-minute chart, a 15, a 30, an hourly, a daily, a weekly, a monthly, every chart, every new candle you get changes probabilities. It might be a slight change. It might be a big change. When you're looking at a chart with a bear flags kind of work on time counts, and this has gone past its time count. And so it doesn't mean the pattern doesn't have viability anymore. What it means is the probabilities begin to shift slightly. So when it was over here, it was like, okay, this is a hugely bearish signal. It tried to break down. It didn't. And now it's kind of still a bearish signal, but slightly less. It's getting closer to the 50-50 marker. And so again, for those of you that are bullish out there, this is what you want to see. You want to see the pattern not be able to break down, and eventually, essentially, the bulls can come back in. Now, again, just putting probabilities on it, it probably over here was around a 70% chance of a breakdown. When it did this and then got back in, it's kind of gone to about a 60 to 55%. So it still favors it slightly, but not to the extent that it did just a week ago or a few days ago. All right, so still on point there. We'll continue to monitor that, and of course, I'll keep you updated. Here's your gold chart getting a little bit of a bounce. Obviously, we had the gold breakdown. So again, 1, 2, 3, 4 down days. Not surprising to see a small bid today, but this is a very crisp, confirmed breakdown now. And so this trend line here becomes major resistance. It's also joining forces with this downsloping trend line. So on any bounces, you'd expect further downside near term on gold. But remember, long term, I still think upside is in the cards.
The crypto market just got hit hard. In a sudden 24-hour slump, major digital assets like Bitcoin, Ethereum, and XRP took a noticeable dive, signaling what many believe to be a sharp market correction. Bitcoin dropped 0.5% to $118,281 after a quiet week, hinting that investor sentiment may be shifting. Ethereum wasn't spared either, falling 0.2% to $3,825.87. XRP slid 0.7% to $3.14, cooling off after its recent rally, while Cardano plunged 2.3%, now sitting at $0.785. Dogecoin took one of the harder hits, down 0.7% to $0.2238 as investors seem to move away from riskier assets. Omni Network OMI exploded nearly 90% to $5. And Any Grow Companion ANI surged 55.9% to $0.05755. Other gainers like CORN, ZND, and BNKR drew fresh interest from traders looking to score fast profits. In the sea of red, some still found green.
On the ES futures, let's flip over to the daily chart of the S&P and take a look. And this is something that, again, I showed yesterday. We have multiple trend lines. Here's one of these wedge patterns, the lowest point here on the chart from April through this. We broke right here, and the markets have still floated higher. But as I've said, this is kind of where the markets are at a point where they're still going up on these animal spirits, retail buying in a frenzy. But the weaker moves, look at how tiny these candles are. It's just kind of a slow grind of, 0.1% to 0.25% a day with a couple flat days in there. But also you're not seeing institutional buying. The volume has dried up. And again, you have all these levels right above that, again, create a wall of resistance. And again, please understand, by no means does it mean that we have to go down this second, this day. It, again, is more of these alert signals that I pay attention to that, again, if you look historically at these type of patterns, and remember, that's what technical analysis is. It's looking at a chart and looking historically at charts across the board and saying, when this pattern forms, when this happens, the odds favor X, Y, or Z. And that's, again, what we do here is it's not about my personal beliefs or your personal beliefs or, what the animal spirits are telling us to do, which is dump all our money in and leverage to the hilt in this environment because the markets seem like they can't go down. It's, wait a minute. When this has happened historically, what has been the ultimate outcome? Whether it's a day from now, a week, or a month from now, what has been that outcome? And that's what I try to go by because honestly, anytime I listen to my personal feelings, that's where I get myself in trouble. It's more about slowly looking at the signs and putting myself in a position based on probability, aka the charts. All right, so again, what we're seeing here on the S&P, we're looking at a lot of resistance here. Markets still, again, they could grind up a little bit, but we are right into that point, and we're also below all the major trend lines, which create risk. The dollar continues to surge today. Here's the DXY. The dollar now is piercing this short-term high pivot. Now, notice how, again, you had a high, lower high, lower high, lower high, lower high. This is the first time in basically multiple months we have had a higher high in the dollar. And again, that's just something that I'm saying, okay, again, is it a huge deal? No, but it is something that I'm paying attention to because like we talked about just a second ago, these are little drops of breadcrumbs that, again, could tell us about further strength in the dollar. Maybe not today, right? Maybe it stalls, but just the mere fact that here was a high and you're making a higher high is a short-term relative bullish signal. Whether we consolidate and pull back and then go higher, we'll have to watch.
Bitcoin may have slowed down, but Michael Saylor isn't flinching. As the market cooled off following a surge to nearly $123,000, the strategy co-founder took to X, formerly Twitter, with a powerful message for the crypto community. Quoting Nike founder Phil Knight, Saylor wrote, "The cowards never started, and the weak died along the way." It was a reminder that navigating Bitcoin's highs and lows takes real conviction, and those who stick around are the ones who win. After testing resistance between $104,000 and $114,000, Bitcoin pulled back slightly and has been trading mostly flat. At the time of writing, BTC hovers around $118,616, reflecting a quiet day after weeks of choppy movement. Traders are trying to make sense of the signals, especially as long-dormant wallets suddenly spring to life. Whale Alert revealed a 12-year-old address moving 343 BTC, and another with 330 BTC also came online. Galaxy Digital stirred the pot even more by moving nearly 380,000 BTC, worth around $447 million onto exchanges, fueling rumors of a major sell-off. Just days ago, Galaxy reportedly sold over 80,000 BTC to a Satoshi-era investor. Despite the tension, Saylor's message cuts through. Bitcoin isn't for the faint-hearted. In his eyes, the future still belongs to the bold. If you have been watching so far, thank you so much for watching, and do not forget to subscribe to Bitcoinzilla for daily news, all for free. That's all for today's video. Until next time.